Hello everyone, welcome to EduTap and welcome to the Finance 360-degree sessions where we cover all the relevant and important finance current affairs and the RBI notifications which are important from your exam point of view. And in today's session, we are going to cover a very important RBI notification, the RBI press release, as well as a very important news article, the finance current affairs that is going on. Okay, so that is regarding the Reserve Bank of India Monetary Policy Committee statement has been released for February 2023 and this is for February 2024 and this is the last MPC meeting that has been held for the financial year 2023-24. Okay, and this is a very important meeting that has happened, as well as there are many of the important decisions that have been given that we are going to discuss in today's session, and I will show you that why the decision has been taken, why the RBI Monetary Policy Committee is maintaining its stance as the withdrawal of accommodation, or why the MPC is keeping the repo rate as same. Okay, so we are going to discuss everything in today's session. So good morning Mehak, good morning Ragini, good morning Saurish, good morning Hemant, good morning Vishwajit, good morning Brunal, Molly and Mukul. So welcome to the session everyone, and in today's session let's have the complete clarity about the Reserve Bank of India Monetary Policy Committee statement that has been released. Okay, so now before moving forward, do subscribe to our YouTube channel and do join our Telegram channel for the PDF of this session, and here you will get the PDF in the Telegram channel of EduTap. You are going to get the PDF of the session and the link for the Telegram channel is given in the description box below. So now starting with the Monetary Policy Committee meeting of February 2024. So for February 2024, the Monetary Policy Committee meeting has just happened and it has just concluded. The statement for the MPC has been released, and in that statement it has been said that as per the evolving macroeconomic situation of the country, the domestic conditions as well as the world conditions, the global condition, it has been decided by the Monetary Policy Committee to keep the policy repo rate under the liquidity adjustment facility unchanged at 6.50%. So it has been decided that the repo rate will be kept unchanged at 6.50%, and in February 2023, there was the last change that had happened where the repo rate was changed from 6.25% to 6.50%, and since the February 2023 till February 2024, there have been 6 meetings that have been conducted, and in all the 6 meetings within the 1 year time frame, the repo rate has been kept unchanged at 6.50%. So when was last repo rate changed? It was changed in February 2023, where the repo rate was increased from 6.25% to 6.50%, and from the February 2026, since the February 2023 till February 2024, the repo rate has been kept unchanged at 6.50%, and in this meeting of February 2024 also, it has been decided to keep the repo rate unchanged at 6.50%. So why this decision has been taken, that is very important, that we are going to understand. As well as the MPC has also decided to remain focused on withdrawal of accommodation. So see, when we take that the RBI is taking neutral stance, that means RBI can increase the repo rate, RBI can decrease the repo rate. When we say that expansionary stance has been taken by the MPC, that means RBI is going to decrease the repo rate so that the money supply can increase in the economy. Okay, decrease the repo rate so that the money supply can increase in the economy. When we say that hawkish stance has been taken, or let's say the contractionary stance has been taken, that means RBI is increasing the repo rate, for the reduction of money supply in the economy. When we say that there is the withdrawal of accommodation, that means that in the previous years there has been quite decrease in the repo rate that happened during the COVID situation. During the COVID situation, the RBI had decreased the repo rate continuously, okay, due to which there was a lot of money supply that was released in the economy. I hope you know that what is repo rate. What is repo rate? Repo rate is the rate at which the RBI is lending to the commercial banks and the commercial banks are giving the RBI the collateral in the form of government securities. So like we take the borrowing from the bank, similarly the banks take the borrowing from the Reserve Bank of India. So the RBI is lending to the commercial banks. If RBI is lending more to the commercial banks will have more money to supply more money in the economy. So this is the complete idea. Okay. So if RBI was decreasing the repo rate, that means RBI was lending at lesser rate to commercial banks. Commercial banks were taking more of the loans from the RBI. They were further giving more loans to the people in the country. So the money supply was increasing in the economy during the COVID situation. The RBI was keeping the repo rate low. After that, it was realized that there is too much money supply that has happened in the economy. Now we have to decrease the money supply. So RBI started increasing the repo rate. RBI started increasing the repo rate, and till February 2023, the RBI increased the repo rate from 4% to 6.5%. In February 2023 only, the repo rate was increased from 6.25% to 6.50%. After that, it has been, so there is complete withdrawal of accommodation that is happening. That means whatever the money supply is extra in the economy, now the RBI is looking after that there is the repo rate that is kept high. So withdrawal of accommodation means in the further months, the RBI is not thinking of reducing the repo rate, because RBI thinks the repo rate is fine now, we do not have to reduce the repo rate. So that is withdrawal of accommodation. That means here the RBI is not saying that I am going to reduce the repo rate, but the RBI can think of reducing the repo rate if the inflation starts increasing very fast in the economy. Okay. So that is the idea, that the RBI has said that we are having the withdrawal of accommodation, that the RBI is not going to decrease the repo rate, but the RBI can think of increasing the repo rate in the coming months. So this is the idea of the withdrawal of accommodation, that the RBI can think of increasing the repo rate in the coming months if the inflation persists or if the inflation increases. Okay. So this is the MPC also decided to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns to the target while supporting growth. So the target of inflation, target of the consumer price index inflation is 4% plus minus 2%. That is, the target is 4%. We have to achieve the inflation of 4%. Plus minus 2%, the inflation should not go below 2% and should not go above 6%. So this is the whole idea that you need to get, that during the COVID situation, the RBI was decreasing the repo rate, and the repo rate was at very low levels, due to which there was huge low repo rate, there was huge money supply in the economy. Seeing the huge money supply in the economy, the inflation was rapidly rising in the economy also. So after that, it was decided that now we have to decrease the money supply. So RBI started increasing the repo rate to decrease the money supply. And the RBI kept increasing the repo rate till February 2023. After February 2023, from April 2023, the RBI has not increased the repo rate, but the RBI is keeping the repo rate constant at 6.50%. So from April 2023 till February 2024, RBI is keeping the repo rate constant at 6.50%, with the idea that the withdrawal of accommodation can happen. The RBI in the future, in the coming meetings, can increase the repo rate. So this is the whole context. Okay, withdrawal of accommodation means that in the future RBI, in the coming meetings, the RBI is can think. So withdrawal of accommodation means that RBI can think of increasing the repo rate if there is the inflation that persists in the economy, or the RBI is going to keep the repo rate constant. Neutral means that RBI can increase the repo rate or the RBI can decrease the repo rate. But withdrawal of accommodation means that decreasing the repo rate is not an option right now, because the inflation is persisting in the economy. Any confusion now? Any confusion? What I have discussed till now, any confusion in this? Because now we are going to discuss the why, and this why is very typical. So you will take time to understand this. So I hope till now everything is clear. In the COVID situation, RBI was reducing the repo rate to increase the money supply in the economy, because the economic activities had to be boosted. Now with the inflation, with the huge money supply, the inflation also came in the economy because of the Russia-Ukraine war. The inflation also came in the economy, and then the RBI decided to increase the repo rate to decrease the money supply in the economy and to decrease the inflation in the economy. RBI had to increase the repo rate till the February 2023. After that, till February 2024, RBI has kept the repo rate at 6.50% with withdrawal of accommodation. Now, why this step has been taken, that the RBI is keeping the repo rate constant? Why the RBI is keeping the repo rate constant at 6.50%, and why the RBI is saying that we are going to withdraw the accommodation if there is inflation that persists in the economy? So first of all, path of disinflation needs to be sustained. So that's why it has been said in the statement, it has been said in the governor's statement, as well as it has been said in the MPC statement. So the reasons that I am going to give you, they are not imaginary reasons, they are actually being given in the Monetary Policy Committee statement, okay, that you can read. So why? First of all, the path of disinflation. What is disinflation? Disinflation means reducing the inflation rate. So if the inflation rate is 6%, we have to bring it down to 5.5%, we have to bring it down to 5%, we have to bring it further down to 4.5% and 4%. So that is disinflation, when the inflation rate is positive but it is decreasing. So the path of disinflation needs to be sustained. So we have seen that in October 2023, the inflation rate was 4.9%. So the inflation rate has come down from the 7%, from the 6% of the previous year to 4.9% in October 2023, and it was a good percentage of inflation because it was around 4% and within the range of 2% to 6%. Okay, within the range of 2% to 6%. So 4.9% is a good inflation rate in the country. But in November 2023, what happened? That the inflation rate increased to 5.5%. In December 2023, the inflation rate increased to 5.69%. So what is happening? That the inflation rate sometimes starts increasing very fast in the country. So the RBI has said that yes, disinflation is happening in the country. That means from the 7%, from the 7.5% of the inflation that was happening in the previous year, we have came down to the 4%, 5% range. But still we have to continue this path of disinflation so that it sustains in the economy for a longer period, and we should not spiral back to the 6% of the inflation and 6.57%, 7.5% of the inflation. So that's why we are keeping the repo rate at 6.50%. That is a high repo rate, because we see that okay, inflation is not above 6%, so we do not have to increase the repo rate, because increasing the repo rate means that the banks will take the loan at a higher rate. The banks will not want to take much of the loan, and they will not, like, they will give the loan at a higher interest rate to the public. So the public will not want to take the loans from the banks as much. With this, money supply decreases, with this, the growth decreases in the economy. So the RBI is saying that okay, we are not going to increase, we are not increasing the repo rate, but we are keeping the repo rate at high percentage with the withdrawal of accommodation idea, that we can increase the repo rate in the coming months if there is the requirement, if the inflation goes above 6% or goes above a level that we want to control. So this is the whole idea. Now the second point is, so here any confusion? See, focus on the topic right now. So now monetary policy must continue to be actively disinflationary. So monetary policy has to be kept at a level that it is continuously disinflationary. It is giving the idea to the public that the RBI is working for disinflation. RBI is continuously working for reducing the repo rate. Okay, so that's why withdrawal of accommodation has been said, that the RBI has strictly said that we are not going to reduce the repo rate in the coming meetings. Okay, for now we can increase the repo rate if the inflation starts happening in the economy. So this is giving the idea to the public. This is giving the idea to the public that the RBI is very stringent in controlling the inflation and can increase the repo rate if there is inflation in the economy. So that's why this is anchoring the inflation expectations of the public. Anchoring the inflation expectations means that if we think that okay, in the future the inflation will happen in the economy, and if the repo rate is decreased by the Reserve Bank of India, then what is going to happen? Money supply will increase in the economy, the demand will increase in the economy, and due to this, the prices will start further increasing in the economy and the inflation will further increase in the economy. So this kind of assumption can be drawn by the people that if the RBI has the neutral stance, then the repo rate can decrease in the coming years. So this will lead to the expectation that the prices are going to increase in the future. So we should start accumulating the wealth right now when the assets are at low price, because in the future the assets can be at a higher price. So if this kind of expectation starts happening, that okay, the prices are going to increase in the future, what we will do? We will start hoarding up the supply. Like in US, the price of rice was increasing very fast. So everyone started hoarding up the rice with themselves, due to which prices of rice actually went very, very high. So that's why the RBI has to anchor the inflation expectations, that the public has this idea that RBI is doing everything to control the inflation and the prices are not going to rise very fast in the economy in the coming months, in the coming years. For this, the RBI has kept the repo rate at high percentage, that is 6.50%, as well as said that we are not going to reduce the repo rate. The repo rate can be increased actually in the coming months, in the coming period, so that we are trying to control the inflation to further and further levels. So this is the anchoring of inflation expectations, because if we have the inflation expectation, what we will do? That okay, prices are going to rise in the future, so we should start buying right now, we should start hoarding right now. So this kind of thing should not happen. That is what we say, anchoring the inflation expectations, keeping the inflation expectations very low. That's why the RBI is focusing too much on the withdrawal of accommodation and not giving any signal that we are going to make it neutral. No, withdrawal of accommodation is there, okay? And fuller transmission. Fuller transmission means that right now we can see that the inflation rate is decreasing. It decreased to 4.9% in October 2023. But it again increased to 5.5%, 5.7% in November and December months. So what is happening? That the inflation is happening like this. And it is not staying at near 4% for a longer period. So fuller transmission means that now repo rate is at a high percentage, so fully transmitting it. So when the repo rate is increased, you have to understand that when repo rate is increased, the banks will be taking the loan from the Reserve Bank of India at a higher rate, So the banks are taking the loan from the Reserve Bank of India at a higher rate, and the banks will provide the loan to the customers at a higher interest rate. Then the customers will start taking less loans because they are getting the loans at the higher rate. So the customers will start taking less loans from the banks. Less demand will be created because less loans are being taken. So demand will reduce. The prices will start reducing. Now this whole process, it takes time to happen. The whole process of the increasing the repo rate and making it affect the customers decreasing their demand. So this takes time. So for the fuller transmission of the increased repo rate was increased for continuously from 4% to 6.5%. So to show its effect, it will take time. And for the fuller transmission to happen, it will take time. So we are waiting for that to happen, that the fuller transmission of the increase in the repo rate, it is going to take time. Until then, the RBI is thinking of not decreasing the repo rate, because then the whole effect will be reversed very fast. The MPC will remain resolute in its commitment to align the inflation to the target. That means we want to reach to 4%. The inflation should be around 4%, even if it is like the range is plus minus 2%. That is, the inflation can go like should not be below 2%, the inflation should not be above 6%. That means even if we have the inflation of 5.5% in November 2023, even we have the inflation of 5.69% in the December 2023, that is still lower than 6%. But the RBI is saying that we want to align the inflation to the target. That means the inflation should be more and more near to the 4%. It should not be near to the maximum range or the upper tolerance level. That should not happen. So this is why the RBI is thinking, the MPC is thinking of keeping the repo rate at the higher level at the 6.50%, because still the inflation scenario is there. Still we are spiraling in between the inflation, in between the high and the low inflation. Any confusion till now? I hope you have understood the why of the situation, that why the RBI is keeping the withdrawal of accommodation to anchor the inflation expectation, why the RBI is keeping the repo rate constant to have the fuller transmission of the increase in the repo rate in the economy. Because the repo rate from the COVID situation, the repo rate was 4%. Now the repo rate has been increased to 6.5% till February 2023. And this increase in the repo rate, it will show its effect a little slowly. So we are waiting for its effect to be shown completely in the economy so that the inflation can come to near the 4%. Okay. Plus minus 2% means 2% is the lower range and 6% is the upper range. The inflation should not be above 6%, should not be below 2%. Now the Monetary Policy Committee, I hope you have understood, has kept the repo rate at 6.50%. Now the SDF is less than the repo rate by 0.25% and the MSF is greater than the repo rate by 0.25%. Okay. So, okay. So this is the idea. SDF हमेशा 0.25% नीचे रहेगा रेपो रेट से, MSF हमेशा 0.25% ऊपर रहेगा रेपो रेट से. ओके, सो इफ रेपो रेट इज 6.5% minus 0.5% is the SDF rate, that is 6.25%, plus 0.5% that is 6.75% is the MSF, and the MSF is equal to bank rate. MSF बैंक रेट के इक्वल रहता है, तो अगर MSF 6.75% है तो बैंक रेट भी 6.75% रहेगा. Okay, these decisions are in consonance with the objective of achieving the medium term target for the CPI inflation. See, the CPI inflation is actually the retail inflation. This is the inflation that is the consumer price index inflation. This is the inflation that affects the consumers. That's why we want to decrease this inflation, and that's why we have a target of this inflation, that is the CPI inflation, that the CPI inflation should be around 4% with the range of plus minus 2% while supporting growth. See what is happening. Let me tell you one thing. So a very valid question has been asked by Ojasvi. So she is saying that from February 2023, the RBI has stopped increasing in February 2023, the repo rate was increased from 6.25% to 6.5%. After that, the RBI is not increasing the repo rate. From April 2023, the next meeting happened in April 2023. So from April 2023, it was decided that the repo rate will be kept constant at 6.5%. This decision has continued till February 2024. So why the RBI has done so? Why the RBI has done so? That the inflation is reaching above also, inflation is rising also, still the RBI is keeping the repo rate constant at 6.5%. This is because the inflation is spiraling. Inflation is also going at very low percentage. This is one of the reasons that if the inflation is going to 5.5%, 5.7%, the inflation has also gone to 4.3%, 4.9%. The second reason is, as I have told you, that the repo rate, the increase in repo rate that happened from COVID situation. In the COVID, the repo rate was 4%. That was increased to 6.5% within a year term. The inflation was increased by, the repo rate was increased very fast. Now, the increase in the repo rate, this will take time to show its effect in the economy. So now the money supply is slowly decreasing in the economy. So I hope this is clear now. That first of all, the inflation has risen, the inflation has also gone down. So RBI is seeing this position that okay, the inflation is coming within the range, the inflation is also decreasing. So the RBI should not increase the repo rate to such high levels also that it affects the growth of the country. That also should not happen, right? As well as the increase in the repo rate, it takes time. So if the increase in the repo rate stopped in February 2023, it will take 1-2 years time to show the full effect of the increase in repo rate to decrease the money supply at greater levels. Okay. Okay. We are coming to that point. So I hope you have understood this whole idea. Now coming to the domestic economy, the inflation in the domestic economy. So first of all, from its October 2023 TRAW means the bottom point. So the CPI inflation reached to 4.9%. That was a very low point of inflation. CPI inflation increased to 5.5% in the November 2023 and increased to 5.7%, that is 5.69% by December 2023. Food inflation is primarily the reason for the increase in the CPI inflation. Food inflation, primarily the year-on-year vegetable price increases drove the pickup in the CPI inflation, drove the pickup in the retail or the headline inflation, even as deflation in fuel deepened. So there is the deflation in fuel that is happening. That means the prices of the fuel are decreasing, as well as the core inflation, that is the CPI inflation, that is excluding the volatile food prices and that is excluding the volatile fuel prices. This core inflation softened to a 4-year low of 3.8% in December. So if we see for the core inflation is actually decreasing very fast. It is only the food inflation that is picking up the CPI inflation. So you can understand that in December, the CPI inflation is high because of the food prices. Otherwise, the core inflation, that is the CPI inflation excluding the food and fuel, has actually softened to a 4-year low of 3.8%. Okay. Now, so this is the condition till December 2023. Now going forward, the inflation trajectory would be shaped by the evolving food inflation outlook, that how the food inflation increases. So the idea is that the Rabi sowing has surpassed last year level. That will be harvested in the coming months. So that will be a good harvest that we will get. The usual seasonal correction in the vegetable prices have also been seen, though unevenly in the different vegetables, yet considerable uncertainty is there in the, because the sowing has happened, and between the sowing and harvesting you can understand that how many problems can come in the country. Okay, that's why it has been said that there is uncertainty that comes in the food prices, in the food production, and that's why the whole of the CPI inflation, it will somehow depend on the food inflation, on the food prices. The continuing pass-through of monetary policy actions, because I have told you that the repo rate was increased from 4% to 6.5% till the February 2023. So the pass-through is still happening of the monetary policy action of the increase in the repo rate. It has not completed the pass-through, the whole action that was taken by the RBI. The effects are being shown now. The money supply is decreasing now, and stance is keeping core inflation muted, core inflation at low level. Okay, so what steps were taken before of increasing the repo rate, now keeping the repo rate at a high level, constant at a high level, as well as the withdrawal of accommodation. That stance is anchoring the inflation expectations, and due to which the core inflation is muted. It is only the food inflation that is creating the problem right now. CPI inflation is projected at 5.4% for 2023-24. Assuming a normal monsoon next year, the CPI inflation for 24-25 is projected at 4.5%. So this is the projection that has been given by the Reserve Bank of India, by the Monetary Policy Committee. Now this is what you have to remember, because for this year as well as for the next financial year, the projections has been brought out. Okay. So the next point is regarding the CPI inflation. You know that the CPI inflation has the maximum weight of food and beverages, and that's why food prices affect the CPI inflation very strongly. Okay. Domestic economy, now real GDP. Coming to the real GDP, we have understood the inflation scenario. So as per the first advanced estimates that were released by the National Statistical Office, real GDP is expected to grow by 7.3% year on year in the 2023-24. So this is for the first advanced estimates have given this data that for the 2023-24, the real GDP growth is seen at 7.3%. That is a very, very good growth rate for a country coming out from the COVID and coming out from the effects of the Russia-Ukraine war. Okay, underpinned by strong investment that was seen in our country. There was strong investment that happened. On the supply side, the gross value added expanded by 6.9% in 2023-24. So GDP is usually seen from the expenditure side, from the consumer side, and the GVA, that is the gross value added, this is seen from the producer's side. Okay, so on the supply side, on the producer's side, the gross value added expanded by 6.9% in 2023-24, with manufacturing and services sector as the key drivers of the growth of the gross value added. Coming to looking ahead, recovery in Rabi sowing, because the Rabi sowing has been very good. Sustained profitability in the manufacturing and underlying resilience that has been shown by the service sector in our country. They should support economic activity in 24-25 also. So it has been said that the demand side is also very well. The consumer demand is increasing. The household consumption is expected to improve further. Prospects of fixed investment remain bright. There is the increase that is happening of the private capital expenditure. Okay, so usually the government is the one, like during the COVID situation, the government was spending a lot so that the economic activities can continue in the economy, and there is the demand that can sustain in the economy, because during the COVID there was the recession that was coming. There was the recessionary situation that was coming in many of the countries, that the demand, the production was going down. So in this situation, the government had to spend a lot so that the demand can sustain and the production can happen at a basic level. But now what has been seen, that the private capital expenditure is also increasing. That means the investment done by the private sector is also increasing very fast. Improved business sentiments. So of course, when the private expenditure is increasing, the capital expenditure investment is increasing. That means they have better business sentiments. Healthy balance sheet of the banks and corporates. Government continued thrust on the capital expenditure is still there. Improving outlook for global trade and rising integration in global supply chain will support the net external demand. So it has been expected by the Monetary Policy Committee that the real GDP growth for 2024-25 is projected at 7%. So this is the projection that has been given by the Monetary Policy Committee. So this is the projection. These both projections have been given by the National Statistical Office, and this is the projection given by the Monetary Policy Committee, okay, for the 24-25. So this is the projection given by the Reserve Bank of India, by the Monetary Policy Committee for the financial year 24-25, that is 7%. Okay, real GDP growth for 24-25 is projected at 7%. So this is it for today. Any confusion? So this is the first question. I hope you will be easily able to answer this question, and this is the second question. So try to answer this question, a very easy question that you can answer. Now I want to show you the students that have given the right answer of the previous session question. So Kingshuk, user, Meenal, Shibanand, Kaushal, Imtiaz, user, Riya, Dinesh, Molly, Vardman, Saurish, Abhay, Ankita, Rahul, Padmanabha, Mohit, sorry, Sai, Jhanna, JSK, Rohit, Peace. Yes, these videos, they cover only the finance part as well as the RBI notifications. Okay, Ankit, Garima, Abhishek, Prakash, Mukul, Gauri, Divya, Komal, Rushi, Anusha, Gudiya, Vishal, Leader, GB, Asha, Lucifer, Prakhar. Okay, so I will try to reduce my speed of speaking. Like during the session, if you think that the speed is very high, during the session also you can tell me so that I can reduce my speed. Usually we have, like, I try to complete the session in a time frame. So when I see that the time is running away, I try to speed up the speech, but I will try to see that I reduce my scale of speech. Okay, Vijay, Manori, Navdeep, Vanshik, Meem, Mrunal, Anuj, Namrata, AV, Akash, Yash, and all. Thank you very much for all the nice comments that you people are sending me. It is a great boost in the it is a great motivator for any of the faculty. Okay, if you are giving such nice, such polite, such good comments, so it is a great boost for the faculty. It is a great motivator for the faculty, and the faculty also wants to bring new and better material for you all. Okay, so thank you very much. It means a lot to get these kind comments from you all, and thank you very much for all the comments. As well as if you are giving the right answer of the questions, it also shows that whatever I am teaching, you are getting the point, as well as you are also able to understand the news articles. So that's why I I try to get as many answers I can get from you all. That's why I always tell you to give the right answer of the, homework question. Because if you are giving the answer of the homework question, that means you are understanding the whole of the news article, and that is a big thing that you have to do from the exam point of view, as well as it motivates the faculty also to keep on bringing the better sessions. Okay, so now there is a big announcement from EduTap that we have brought for you the comprehensive guidebook for RBI, NABARD and SEBI, so that through a single guidebook you can get many of your queries resolved. Okay, if you want to know about the syllabus, if you want to know about the pattern, if you want to get the previous year questions, these are provided with this guidebook. So you can easily download this guidebook. This is absolutely free of cost to save your time, to save your efforts. So you can easily download the guidebook, and the link is provided in the description box below. Okay. Real GDP is percentage of which figure? Real GDP, if we say that real GDP is 7%, that means the growth we are talking about. Real GDP growth, okay? That from the past year, let's say in the past, the 100 was the real GDP. Now the real GDP is 107. So that means there is a 7% growth that has happened in the real GDP, okay? So that is the idea. Now understood? So Aditya, real GDP growth is calculated year on year, that from the past year, how much growth we have seen or how much growth is expected in the coming year. Any confusion now? Any other confusion? See, try to cover, like start from February onwards, and if the examination is happening on April, let's say, so cover January also. If the examination is happening on the later months, then you only have to cover, like if you have less time, then cover 5-6 months only. That will also be good. Okay, so thank you very much. And for NABARD Grade A, does EduTap's YouTube videos enough for the ESI current affairs? I will say that see, the videos, they are for your understanding point of view, so that you can understand a news article very well. But you have to go through the course that you have to go through the magazines that you are getting to get the whole idea. Okay. Yes, if you have less time, 5 to 6 months, like 6 months of the schemes and 5 months of the other current affairs, you should be doing. So thank you very much, and I hope